Good evening, all.
G'day.
What are you
How are
doing?
we all? As I get up and close my door so you don't hear my dryer. all class here at UTG. Hope you're well. I will potentially apologize in advance. My little guy's, as in my little dog, is sitting here next to me. So if he barks, I apologize. You'll hear him being punted over the balcony if he does. So. Not really, not really. Hope you're all well. Hope you're enjoying the trades and following along. A little bit of a not a different format, but we're kind of back to our old ways of using a program where we can annotate on the screen and have a little bit more fun, like what we were doing beforehand. So hope everyone's staying safe. Looking forward to all the announcements this weekend for Victoria. Hopefully, a few of those are fast tracked and we're out of this stage 4 lockdown and a little bit more flexibility. I just want to go see my brother Adam and the fam and have a couple of drinks, watch the F1. We were just talking about that a second ago and how good that would be. But that's enough of our personal lives. Ads, you doing well?
Yeah, everything's going all right. We're still vertical, so that's the main thing.
Yeah, we're happy, healthy, and have roofs over our heads, so we're blessed. But all right, let's get into BTC. Not surprising to be here. I hope you've been following along with us over the last couple of months, but in particular the last 2 or 3 weeks, where we've navigated this run quite well, and I certainly hope you have as well. On the 22nd was pretty significant, where we spoke about where we are now in this demand zone. You'll see, and this is, how good is this? We're just talking about how good it is to actually annotate again on the screen. So we saw this here. We saw how we hit this demand zone, and what was really interesting. Obviously, 10.5 was going to be the most significant level here for BTC to reject. And what we said on the 22nd was the only way we would take a long position for me at that point was up to about 10.68 at that time, was if we broke above that 10.5. Now, the buying reaction off this level was not as aggressive as sort of what you would want to see had we have had some sort of reversal and we're potentially going to head back up before heading back down towards this demand. And when we didn't break below that 10.5, this is exactly where I opened a short, because it was very obvious weakness. You want to see a strong buy up off demand. This was obviously just a first little test of liquidity. We rejected off this 10.5, and as we said in that analysis on the 22nd, that level, look, the 10.1s level in this demand was looking like the likely target. Why? Because of this, we breached this pretty clearly. In our opinion, or in my opinion at that time, and Ads' opinion, that this demand level was cooked, and the next time that we revisited it, it was going to be a significant drop, and that's sort of exactly what we had here. Ads.
Yeah, absolutely. Look, it just going on, just expanding on that as well. This level here, while it was on a decent pivot, it is very, very. It is still in a pause in the market. It's not it wasn't a very, very good reaction out of this zone. Like, we did have some movement up from 10.3 to 10.9, but it's nothing like that sort of move there, where we create a really, really high quality, nice zone at around 12K. So nothing like that. But it was strong enough for us to bounce off once, and we did premise that we'd probably see, this sort of area again between the 38 and some of the tops that we saw previously at around that 10.580 level, and that's exactly what happened. We did wick off that, bounce off that quite aggressively, and have another go at that level of demand and smash through it. At the moment, we have eaten up the entirety of this level, so really it comes down to we're going to respect some of this price action here, support resistance flip, if you want to take it old school, where we've broken through support and it's now resistance for the retest, and we can now continue down back to that 10,000 demand there, Ty.
Yeah, and what's been really, really cool is if you put on Trend Breaker, and we went over this on Tuesday night, Trend Breaker, literally, you can see here, if we can potentially make those settings just a little bit brighter, Ads, this here, Trend Breaker calling the top of this move up at 10.9. We had that bearish retest of that 10.9 level, and then down we came from there. So Trend Breaker really, really giving us a good signal. There's my little guy having a bark. And here now as well, Trend Breaker, this is one of our custom indicators. You can see it here, where at this level, the blue indicates a change in direction, or a change in trend from a bullish trend. We're now saying, really for the first time since all the way back up here, Ads, that we're in a little bit of a bear trend. Now, that's not to say that this is where we're heading. But it does go along quite well with our theory that we spoke about a few weeks ago now, where this top level, if we zoom out ads, and we can annotate on the screen. Let's zoom out quite a bit and look at that top level, where we spoke about this really being a little mini distribution, or well, not so much a mini, but a pretty significant sort of distribution zone all the way from back here, where we spoke about this. We've now, and I guess if we're looking at the structure of things, this could be part of a larger markdown phase where we've distributed here into the late buyers. We've had our first significant markdown, and as we know, it sort of follows the Wyckoff rules where we have these wave patterns down. That's not to say that's going to happen. This is still yet to sort of prove itself that this is either a reaccumulation zone where we've had our selling climax, a little bit of an automatic reaction here, and then we would expect a sort of a secondary test. And if we scroll right ads, this could very much be an accumulation zone for a little bit of time yet, where we sort of sit within. Don't you love it now that I've got the power to annotate? I'm just drawing crap all over the screens. How good is it? So, we come back down, and as we sort of saw above and previously back in sort of June, July, before we had that big run up, this could potentially be our zone for a little bit. If we were to continue down and then break below this point, which I really do think we will, where I think we may end up testing this bottom demand zone, then that would maybe go in more of favor of this being a continued markdown phase, where we might see that 9294 be the catalyst for the next sort of round of accumulation after we see this sort of the next round of mini capitulation like what we saw here.
Yeah, I personally think that, and I do agree, but this level here, when we did bounce and take a lot out of this zone, this liquidity area from 9.8 to 10, we smashed through this. We ate through a lot of this liquidity there, and honestly, by the time we get there again, it's probably not going to be likely that we'll get held up there as significant as we did before, between the 4th and the 7th of September.
That's right. That's exactly right. And I think we mentioned that a few weeks ago, where this point here was really the first significant test of the liquidity in this zone. The whales want to test the liquidity. They want to see the buying reaction at that level. They've sold here. They've accumulated in a mini sort of level here, and then they've sold right back out here into the late buys of this area. 11.2 was never going to be, in our opinion, let's not say never. There was a very low chance of 11.2 being broken, in our opinion. That was going to be a significant level for people to be selling out of this market, the silly buyers buying into it, and the smart guys selling out of it. And that's kind of exactly what happened. So again, now when we test this liquidity here, we know that there's going to be a ton of buys there. There's probably going to be a ton of buys here, and there's no doubt going to be a ton of buys all the way back down here. And like Ads and I said, I've got buys all the way down to 8.2. Does that mean I think we're going to get there? No, not necessarily, but it certainly means that there would likely be a lot of people in the same boat with those very low sort of stink bids, as we call them.
Absolutely. Look, we all know that the gap exists around 9.6. We know that. We'll have a look at the CME chart, but we have wicked down with this price action. We did wick down, and we did touch the top of that zone. We are heading pretty firmly towards that now. With this move through demand and this really weak retest at the moment, we have trend breakers saying that we are starting a bearish trend. We know that this level of liquidity at the left-hand side is pretty worn out, to be honest, from a lot of these buyers or these wicks and accumulation that happened here between the 4th and the 7th, or 4th and the 10th of September. So we are, in my opinion, firmly moving towards that gap. And I think 9.6 is going to be on the cards, to be honest, within the next probably 7 to 10 days. Probably even sooner.
Yeah, and we may end up getting quite a, as we have said, we may end up getting quite a sort of a violent reaction there, but a quick reaction, bang, bang, straight up. We might get sort of potentially like a little V bottom there, hit another area of resistance, and then continue back down towards the sort of the real next level, which could be that 9.4 to 9.2 area. So there will undoubtedly be a lot of buys set here at this 9.6 level, this 9.6 level rather 9.6. What? 9.6 level. So yeah, expect that to be quick in my opinion. But as Ad said, yeah, there's not much now holding this level from becoming toast.
Yeah, look, it all remains to be seen over the next couple of days. We could get held up here, and we might end up getting. Excuse me if I can talk. We might end up getting held up there because this level hasn't been broken yet. It is worn out. It is quite. We have removed a lot of liquidity from there, but we will get more than likely held up there for a little while before moving down. I don't think a smash straight through it immediately is probably on the cards, unless there's a significant amount of selling volume that comes in over the next couple of days, and the volume is still dwindling, so it's not looking like that scenario is going to play out. More than likely, it'll be probably a walk down there or a bleed down there, and then a decent reaction off that gap. That's what I reckon.
We shall see.
Yeah.
All right, let's move on. Let's have a look at FUSD.
FUSD.
Yet again, look at that. Thank you very much, Steamroller, calling the literal top of that move just here. Cha-ching.
Trend breaker.
Trend breaker, sorry. Yep, trend breaker.
ETH USD. Look, it's been pretty predictable. We have been following this over the sessions in between, the morning sessions and our Tuesday night. We were testing this level of supply. Supply. We were testing this level of demand. When we revisited this yesterday, and more than likely it was going to be, or what I thought was going to be the next. The next thing to happen was the 38.2 356 level that was going to be tested for a little bit of relief because of this reaction that we're seeing on the indicators. That didn't come to fruition. Happy to be wrong there, but the overall bias was still correct. So we were expecting something like that before a move down. We didn't end up getting as high as we thought on the 38.2. We ended up only getting to the 23.6 before moving towards that next level of demand, which is 321.25, which we have, respected quite nicely at the moment. It's going to be a little bit tricky to see what this does now, and it's going to be a little bit of a coin flip to see what happens now, because if you look at across some of the altcoins, if you look across some of the entire market, like the high caps and everything like that, they're not really paying attention to oversold conditions on RSI, on Steamroller, on CCI at the moment. They're really just bleeding, in reaction to what's going on the reg stuff, and we are seeing that come across or translate over to a lot of the crypto stuff like BTC, Ethereum, Litecoin, everything like that. So while that we can say Steamroller is oversold, and we should get a relief rally, even back up to the 23.6. I'm not saying that's probably going to come true, but what I will say is a relief is necessary, but it's not expected. That's really goes both ways in terms of bullish scenarios and bearish scenarios with crypto in general, because honestly, it's irrational price action, as we all know, and I don't have to explain that fact either. But it's going to be just a matter of, what we see with price action and where we can see it respected with these zones. So at the moment, we are respected. We have wicked in. We have wicked down to the negative 27.2 fib extension level and, close up against our 321.25 top of our level of demand. I'm not taking any sort of positions off this at the moment. I'm just waiting to see if we can get some confirmation or some printing some price action over the next day or so, the next 24 hours. Give us some more information on whether or not this is going to be respected or not, because we know that we're starting a bearish trend, and we could just retest that 331 level and then smash straight through this demand alongside BTC coming back down towards that 10,000 mark. So as BTC, we know that BTC has more movement to the downside in store. We know that there's a gap very, very close. So it would be pretty irrational, to put long positions straight on this demand and expect it to move in our favor. We need to get some confirmation, on the chart before we do anything like that, Ty.
Yeah, I definitely agree with that. I think I'm certainly not of a long bias at the moment for ETH. I really want to see how the next daily close. We might see some limited price action over the course of the weekend, as we kind of do with traders taking a little bit of a break and lower liquidity over the weekend. We've seen probably the most volatile part of the week, in my opinion, thus far. But I think with the daily close, if we can't break or can't see a strong break above that 332 level tomorrow, even if we do close above 332, I'm still very cautious of anything going further than 340, and that's probably where I'll start to layer in some sells, to be honest with you. And then from if we're using Fibonacci on its own, once we sort of test that lower demand zone, that 27 extension, the zero becomes a little bit of a price action for magnet, where we might end up sort of trending a little bit along there. But that's going to be significant. If we can close strongly above the zero fib line, then sure, I'll look for that 340. But in my opinion, we might end up lingering between the 0 and 27 extension. If we do break below the 27 extension, then that 290 level, that 295 sort of level is well and truly on the cards, in my opinion.
Yeah, and I absolutely agree with that. Absolutely agree with that. That would be, the knife in the coffin in terms of this level of demand. This level on a daily time frame. Okay, with ETH/USD, there's a couple of factors you need to really look at in the way of the daily time frame, and what our indicators look like. Our steamroller indicator is still indicating that we're very, very much bearish. CCI is very, it's at the bottom area there, but we know how irrational CCI is and how quickly it can move. RSI is still moving down towards the 40 level. We have crossed below the median 50 line, and usually in the case of that 50 RSI, if we trend below it, more than likely we'll stay below it, and that holds true with bearish movements. This level of demand on the left-hand side here, as you can see, is in a pause. So basically, not on a pivot. Basically in the middle of middle of nowhere pretty much, before moving to the upside. So it's inherently, as a daily level, it's still low quality. So we have bounced off this once. The reaction wasn't great. We didn't even get towards the highest quality one up the top there at 475. Although admittedly the market wasn't geared up for that at that time. But we have moved back here now, and I don't expect there to be any decent reaction off this level, to this extent a second time. I wouldn't expect that. So I'm, very much just cautiously waiting to see if we can get some confirmation on market direction. And you know what? I do think that negative 618 extension 292 is probably going to be on the cards for the next 7 days.
And if we zoom in a little bit as well, not to continue to harp on it, but it just goes sort of to show the benefit of the indicators that we've created here. We saw Trendbreaker telling us at this point here, when it was starting to turn blue, that we were looking for some potentially bearish conditions. Now, pairing that with a supply zone, pairing that with your Fibonacci's, pairing that with whatever it is that you're using, we then have this red indication from Trendbreaker telling us that we're in bearish conditions. So, even for beginner traders, if you're struggling to understand market moves or market direction, using a tool like Trendbreaker or MAs or something like that is a good way to simplify and to help you sort of confirm a bias. It's not the be all end all, but it's well and truly sort of proven that the indicators such as these ones can really have a little bit of can really have a benefit on your trading. If we just go back to the 4 hour very quickly, I just want to mention one thing as well. Looking, if we do bang on Unicon from there, let's get rid of Trendbreaker and we'll bang on Unicon. This is another reason why I spoke about this fib level being significant, along with that sort of 339, 340 level. When we look at our MAs here with our Unicon indicator, yes, it gave us the top of this move, and it's yet to give us any sort of MA cross where we would be into sort of bullish territory. But every time that we have dumps significantly below our Unicon MA levels, these really instantly for me become the next significant levels of resistance. So this is where I look for first. If we break through that, then this is where I'm looking for sort of next. So it's a good way to really simplify potential areas of selling out of long positions or looking at potential short positions, particularly when you pair it with something as significant and straightforward as we teach with Fibonacci or supply and demand.
Yeah. It's just a matter of making it as easy as possible in one glance as possible. Like
100%.
just taking away the guesswork. That's all it is.
That's exactly right. All right, let's get on to BTC dominance as we do.
BTC dominance surging higher, to be honest, man. We did expect a little bit more of, I'm the first one to admit we did expect more downside before this movement to the upside. We were expecting, this bias to continue where we were making higher highs, lower highs, and then continuing that trend onwards. We were expecting a little bit more of a pullback on the dominance before this movement to the upside. We didn't get that, so we're happy to say that we were wrong on that front. But that's all part of the game. We have made another higher high now at 62.2, and this is the level that's most important. And I'll draw in why. I will draw in why is because we have a level of supply there which is quite low quality. However, we've been rejected on that level multiple times. So 1, 2, 3, 4 times now, 5 times now, and this level has, or this candle, or this bunch of candles, these the last few candles, should I say, has smashed through this level, and we are continuing to the next one. The next one being 62.6, the one we spoke about, I believe, on Tuesday night also. So that is a good sign for the BTC dominance, and but it is also not a really good sign for the alt market in general. And we'll have a look at the altcoin market cap after this as well, which I've been looking at in the Discord also. Right now, we could probably expect this level to hold here, or look, we are expecting some form of retest of this support resistance flip, where we've got this one here. So we've got the top of supply there. We've smashed through it. We are now retesting that level before making a decision on what direction we're ultimately going to take. So look, a little bit of a waiting game with the BTC dominance chart. Also, like I said, and like I've been saying, it's not a be all end all. It's only just to give you a guide on what direction the alts are going to take over the next, day or so. So more than likely, we will see this continue its bullish trend after our breakout of the wedge there. So 62.5, 62.6, that top upper level of supply is probably going to be the highest quality. We are on a market pivot point at that point there. So that's probably where it's going to be heading for, Ty.
Yeah, agreed. I want to see us hold 61.68%. If we can't hold, well, let's say between 61.8, 61.68 is where I sort of had my resistance. We've had a mini, and the wonders of annotating. Here we go. So this is pretty much what I had on my chart. This kind of being the neckline. You would expect maybe this W formation, a retest of this horizontal sort of neckline, this demand zone. Should we not hold that, then potentially back down. We could, we're seeing sort of a little bit of a range between here, but likely I think as Ad sort of said, we retest this zone here and then continue back up for myself towards that 62.52 mark. But totally. And the most significant thing that you said throughout that was the bleeding of the alt markets. And that's why we've said for the last few weeks now, stay the hell away from alts. If you're not an experienced trader, if you don't have the time to be sitting there and scalping alts, stay the fuck away, because it's a sure way to get yourself wrecked, to lose sats. You are far better off not being in a trade that's as good as being in a winning one when you're not losing money and you're not experienced enough in this market. So, be patient. How often do we see this? BTC has volatile moves, alts get shat on. We get to a point where the market will settle, it will take a breather, will trend sideways. Alts will have their little mini alt seasons again. We'll make a ton of cash, we'll stash it away, we'll wait for BTC to do its thing again, and then you stay out of the market. If you're not if you've got too much exposure to alts, and I think someone said that in Discord today, they were trading with alts and, you know, we're holding alts and all that sort of stuff, that's probably not what I would suggest at the moment. I myself have not taken, I think I've maybe taken 2 alt trades in the last month, and the rest of it has just been purely on BTC and ETH. So that's not a bad way to be.
Absolutely, and I've been exactly the same. BTC, Ethereum has been the 2 main pairs that I've been trading over the past couple of weeks, and I've been sharing those publicly in the Discord also. So
100%.
Yeah.
Take what the market gives you. You don't have to be in every trade. There's going to be plenty more trades. If only ETH and BTC are the ones making money or making moves right now, just trade that. Stay away from alts. Don't be emotionally tied to them or tied to a pair, or because you see people posting shit about Uniswap or Sushi or whatever the name is these days. I've personally not traded a single one of those, and I could not care less about them because they're too volatile. You saw what happened with Sushi. It's don't chase the fad. Chase what's proven and works, and is a lot more volatile than the shitty alts that you're running after.
Yeah.
All right, let's get into just quickly. I just want to look at FBTC. I think this chart has summed it up quite well, but FTC, we'd probably, BTC, we'd expect to see the same thing. Serious dumpage. Yep, and here we are again. So on Tuesday night, we spoke about this and the significance of this demand zone. Ads drew up his fib extension levels there, respected beautifully, and we're now looking at this resistance level at this 31915 level. If we put Unicon on their ads, I imagine our MAs would line up quite well at that level as his level of resistance, looking very similar to BTC in the sense where we just shared beforehand that when we have these runs down and these bounces off demand zones, our first MA becomes our significant level of resistance. We break and close above that. Then the second one becomes our significant level of resistance. So a very simple and easy way to play ETH at the moment. I personally not trading it. I would expect a test of that demand zone, and potentially if we keep going the way that we're going with alts bleeding so heavily, that sort of 168 extension is potentially looking likely at this stage.
And something like this might be the way to go.
Yep,
in the way
that's the one. That is what I would think.
Yeah, something like that. I would think that's the beauty of Fibonacci, to be honest. But we know the direction of the BTC dominance chart. We know the direction of the total alt market. We know the direction that we can expect this to go. We know our MAs are down. We know our so in general, you know, there's a bearish bias. So we can expect any bounces to be short-lived. Mm-hmm. And our first level is that 132011 in terms of the Fibonacci levels before moving down to the 1.618, which is going to be the most important level in terms of the Fibonacci extension tool that there is. It can go higher than that in terms of the fib levels. We can get to the 786 before moving down. We can even get back to the 618 before moving down again, but that would be a change in structure. So what we're really looking for, we're looking for this one level or this 768 to be respected, either of those two before moving down and retesting this demand at least before making a decision on what direction we're going to take. If we're going to move through this demand or we're going to not and start to reverse. So we'll see how we go. BTC dominance chart is going to be the big teller on this one.
Totally. And if we go to our daily time frame and throw on Unimoku on the crypto settings, so Unimoku is our sort of our four-way Ichimoku indicator, which we've got there at the moment. I think is it the standard or the crypto settings? I think, yeah. So there we go. So that's sort of, and the reason why I use the crypto settings on FBTC, I've highlighted in our Ichimoku sessions beforehand, but you can see the significance at the bottom of that Kumo there. That flat Kumo lines up really, really well with demand there at that 1-2 extension, kind of where we're sitting at the moment. And then you can see the next sort of significant level is slightly above that demand zone at that flat Kumo, just below the 1618 level. So you can sort of see now Unimoku has given us the TK cross. We've had a bearish TK cross. We're now in this edge to edge phase of the movements, and going towards if we do just quickly flip towards our standard settings ads, which you can use as entry triggers, if you want to sort of call it that. We've now got all those conditions plus a bearish Kumo twist as well. So that happens, that the bearish Kumo twist for our entry conditions happens about 4 days out. So we get almost 4 days worth of information there when we start getting that bearish Kumo twist. So you could have prepared for that for a little while ago, or you could have just watched these streams and we would have told you anyway. But using Ichimoku, you can go to unitytradinggroup.com and just search Ichimoku for how we would look for entry conditions and exit conditions using our Unimoku indicator.
Yeah.
Bang on. All right, let's get into the reg markets. Unless you want to look at anything else, ads.
Nah, it's all sweet. We'll bang these together.
Excellent. So we're looking at regulated markets here. Anything that we do say or share here within this section is purely just educational only. If you do want to explore more further trading in these regulated markets, talk to your financial advisor.
So after smashing through this level of supply that we had drawn in for quite some time, the rules of supply and demand do carry over here, and we are shooting for the next one. So the next one being at 94.6. We are moving towards that quite aggressively now. We do have some legs still on the indicators to get there, although not much, but that's why we haven't got far to go, to be honest, at 94.6. We are getting held up right now at the 27 extension. More than likely, over the next day or so, being Thursday, Friday night, going into Saturday morning when the markets do close, we might have some wicks to the upside that will see us get rejected or see us get held up at the 94.6 level of supply. That's probably where I would expect the DXY to go. We have been on a monumental run at the moment now. Just on this time frame, this is really isolated to the 4 hour, to be honest. But decent run to the upside towards that level of supply. It is a low quality supply. But however, in saying this, we did have a pretty harsh movement out of this zone. So that's the one I'd be looking at for now. And that's going to really translate over to gold as well. Gold is just moving in the opposite direction. That's what we can really expect with the DXY, or with the dollar, increasing in value not tenfold, but increasing in value quite aggressively. We can see this being stripped away from gold and silver. More than likely, if I go over to silver, it'll be exactly the same boat. Yes, it is moved through our level of demand and then retesting that level also. I would be very cautious over the next couple of days, looking for long positions on gold and silver especially, and especially, something like Euro, AUD, everything like that as well. All the USD pairs that are hedged against DXY, I would be very cautious, going on the opposite foot. Just wait for some confirmation, wait for this trend to be over before, looking for some positions in the opposite direction, or even wait for these levels of Fibonacci or levels of demand and supply to be respected quite nicely before jumping in. That's probably the easiest way to keep yourself out of trouble. But apart from that, Ty, not much I wanted to have a look at. I'll have a quick look at the all ordinaries. We did move through that level of demand earlier this week, should I say. When was it? On 22nd, so 2 days ago now. We had pushed through up and retested that level or that downtrend line, if I can throw that up on there. So we just put the line chart on there to give us a very loose level of downtrend that we can really expect from this market there. And yeah, we have respected it quite nicely, and in my opinion, continuing down that trend towards that next level of fibs and our next very short-term level of demand at 23.6 or 5871. But that's where I'll leave it here tonight, Ty. We're at 40 minutes now.
Bloody lovely. All right. Well, I hope you enjoyed tonight's session. As always, unitytradinggroup.com. Come over to the Facebook as well. The Facebook is absolutely cranking at the moment. Lots of great people in there. We're going to put more units and quizzes. We'll have a quiz next week for you as well, for those who might want to win a couple of free indicator packs from us. And for all the indicators and everything you've seen, go to indicators page on Unity Trading Group. And most importantly, come on over to Discord. Come over and have a chat. We've got lots of new faces over the last few days. And for anybody watching, a real sincere welcome to you, and hope you're enjoying all of the free content that we pump out there. If you're paying for expensive Discord groups, think again. Anyway. Come over and get it all for free from us. Paying for Discord groups is anyway. We'll leave that for another day. Come over, have some fun, share charts, be interactive, not judgmental community, and we look forward to seeing you there. And we'll see you very soon.
Absolutely, we'll catch you tomorrow morning for the last update of the week.
Bye bye.